It's time for the big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Thank you both for being with us on this Monday. So ZoomInfo Technologies, Mike, is your very first trade here. You said this is in the world of cloud, the bullish breakout potential. Tell us about that, Mike.
So we're looking at ZoomInfo, kind of like CRM, not exactly the same sort of company, but what we're seeing is that break through the 200, which is pretty much coincident with the recent highs. It's actually holding that level right now. So any entry in here, I think, is a great play. I love everything cloud-based. That's been definitely one of the strongest sectors, maybe not the strongest sector. Energy is the strongest. But
okay, so Yeah, no, I didn't mean to jump on you, Ben. So he likes what he's seeing in overall in cloud. ZoomInfo, is something that he's looking at here for this bullish breakout. So tell me more, Ben, when you take a look at this chart.
Mike, Nicole, good morning. Guys, it looks a lot like what we've seen in terms of the broader market. A nice move up off the March lows back to a critical area right now. And let's just dive into the 30-minute time frame so you can see, as mentioned here, this was actually the Feb low. So you can see how the March lows were unable to take out that 45 from the, we'll call it the end of February. But again, just wanted to point out the run up 45 all the way up to 61 and no rejection of these upper levels here. We're holding this level right now, but much like the broader market at a critical juncture at this point. Now, I want to point out here again, no rejection as of this point, but take a look at the daily because what we're looking at here is the move off the Feb lows. If you can see, we actually have a January low to keep an eye on as well. So this is the Feb low that we just looked at, but there was another Jan low just below 45. That was all the way down at 42.65. So if we were even to take out the March to Feb lows, you have this lower extreme to keep an eye on here, which is quite a bit below. Now, I just want to point out we're back up above the 50-day moving average. This is the blue line, trying to contend with the 200-day moving average right now, testing it. But look at RSI, guys. It has a little bit of room to go to the upside here. Volume, somewhat lackluster, typical of a bear rally, I would think. And again, as mentioned here, much like the broader market here. Now you can see how ZI testing a key area, testing those Feb highs right now. The broader market recently rifling up and through those Feb highs, seeing some follow through. You mentioned the NASDAQ at the top of the show here, Nicole, or at the top of the segments rallying and leading the way to the upside. I wanted to take a step back and again point out the 200-day moving average. I think that's the next hurdle to get up above, but take a look at the weekly time frame and you can see some of the high conviction trade off the all-time high we saw up at 79.17. And I like to think of this as kind of like price stepping into an elevator shaft. It just fell off for 2 weeks straight. And then we saw a very similar pattern play out here again in the end of December, beginning of January. So that's what we're trying to claw our way back above right now. Again, you can see that high conviction to the downside. And if we do roll over here, if we do fail at this critical juncture, I'd be talking about 52.50. If we were to open up a door, see some energy below that, we'd potentially retest that 42.50 level. But you can see a series of lower highs right now. That's why I say I think it's important right now that we continue this trajectory to the upside instead of rolling over. The bulls want to see this one up and through the $62.50, $65 level, and then again taking out some of these key hurdles that were made on the way down from 79.
I think it's important that you're showing those lows from January, from February, and some concerns. The big picture on the rally is people aren't really feeling 100% that it's led by quality and has that conviction. So, Mike, is yours more of a short-term trade or long-term trade? Tell us more.
Yeah, I definitely deal more in the short-term trade. By short-term, I'm talking probably in the neighborhood of 10 to 15 days of holding time. So this is not a buy and hold. This is a breakout scenario for sure. And I mean, I guess kind of the good thing about that is that if you're wrong, you'll know pretty darn quickly if we can't hold that 200-day, and then you just exit it for a minimal loss.
Exit it for a minimal loss. And that's why these trades are so important as you really give us all the details on these trades. Ben, what do you think?
Well, I think it's important. Let's keep a close eye on the broader market here. Again, as mentioned, the NASDAQ, the ES, the Dow, and the Russell for that matter, not as much small caps, but the other three majors and many of these individual names that we look at a critical level right now where if the bulls can continue to exhibit some of the enthusiasm we've seen off the March lows, we'll see some follow through at this point. But if not, Nicole, we've seen this before. These bear market rallies fail to really see follow through, directional conviction to the upside. You get a little bit short covering or some bottom picking. But again, that's not really initiative in terms of buying where investors see value at higher levels. That's what drives price higher with follow through. And again, conviction to the upside. And we're not seeing that since the beginning of January, basically. So I think we're at a critical point right now, somewhat of a pivotal area here for not only this name, ZI specifically, but many of the names that we're looking at here on 360 as well as the broader market in general.
Right. So, that's interesting, right? As you see, there are some worries, but the big picture here is that Mike does truly believe in this, at least in a near-term bullish breakout. So we'll watch for that. Mike, thank you for that. How about we move on to the world of cannabis? A different picture here for LFLY. Mike.
Yeah. So, last week, cannabis was in a lot of the news stories and everything like that with the MORE Act being voted on in the House. Probably going to be dead in the Senate, but what we're seeing is a general momentum towards some sort of decriminalization / legalization on a federal level. You got a lot of these stocks are just really, really low, and so just as maybe a bit of a more longer term type of play, but still any sort of pullback in anything like this, in any of your quality ones. I'm not talking about going and buying some penny stock. If you want to do that, that's a lottery ticket. But this is a newly IPO'd in the last few months. And I like it in the fact that it's not one company. Think of it as kind of almost like a Yelp or a Google for cannabis shoppers, where it points you towards things that are in your neighborhood. So you're not dependent on any state sort of or local jurisdiction issues tied to one company or region or anything like that. It's all over the place and not specific to one company.
Right, and I think you're making a good point about the regulation and the news there too. Is it really does seem that they're moving forward to decriminalize cannabis overall, right? And because not just for medicinal, but for some recreational use as well. Ben, your thoughts here on LFLY?
It sure seems like they're leaning in that direction, but again, this has been a prolonged process, and there's still nothing definitive in terms of actually when that will happen. Now, I'd be more in the camp in terms of arguing that it's more a matter of when, not so much if, but it's still yet to happen. So again, a lot of these stocks that have seen benefits from the anticipation thereof have really yet to see follow through. And even if we do get it, then ultimately, again, it really comes down to the bottom line. Do these stocks actually benefit from federal legalization, and does it increase demand ultimately? I mean, here, let's just break down what we've seen recently here. I've got the 30-minute time frame up. You can see, as Mike mentioned here, not a lot of time here to take a look at in terms of this stock is relatively new since the IPO. You can see the move down to 527 initially, back up to 1158, and Nicole, Mike, how we're kind of just basically in the middle of the range right now. So again, you have a well-defined lower extreme and an upper extreme, and we're just kind of holding right in the middle of that range. Now, take a look at the daily time frame with me, and I actually sped up the RSI on this one. Normally a 14-day, this is a 7-day now. So you can see up into the 1158 level, we did get a little bit overextended into that area, and you can see the spike here. Notice how when we did get to 1158, we actually posted a lower high in the RSI. So now we're kind of back in the middle of the range, feeding into what we've seen in terms of price activity. And then lastly, I just wanted to take a look at, normally I jump into the weekly time frame in this instance though, but again, not a lot of data here. So you can see we always talk about these bell curves, basically the way I like to think of price or balance of price. You have that really well-defined upper extreme, or in this case, we're talking about a sell tail, the lower extreme here, a buy tail down to 527. And then again, as mentioned, when we were looking at the more intraday time frame, you can see how we're basically in the middle of the range. So you've got well-defined extremes here, just not a lot of directional conviction, partially just based on the fact that this is relatively newly traded stock. So something to watch here, though. Again, I love having the well-defined upper and lower extremes because it gives you the gauge in terms of the next leg of directional conviction. You would think, again, if we were to get some sort of federal legalization, that 1158 would be the next level that they would try and get up above. But then lastly, I want to point out, not as big of a deal to actually get up above or down below a key level, levels well defined like this. You want to see follow through. Again, we talk about energy, directional conviction, and then ultimately the bulls, if we were to get above 1158, they want to see a new area of consolidation, that kind of overlapping and rotational price activity to help you determine that value has been established at a new upper level. But as of right now, we've got value kind of hovering around this $8, $9 level with, again, a lower extreme at 5 and an upper extreme around 11.
Right. You know, I'm glad you talked about that. And what do you think, Mike, as we take their final look there at LFLY, and then we'll go to Nike?
Yeah, definitely. This is a lot different than Zoom. I'm not looking for any sort of breakout scenario. This is more kind of like the market itself is more of a consolidation or an accumulation sort of phase here. That's why I'm not saying, hey, wait, and then if it trades here, let's go higher. This is, if it comes back to us, great. If not, there'll be plenty of opportunities. These were so, a lot of these stocks were such high flying, a year or two ago, everybody bullish on it and everything like that. We've seen these come, well, almost down to zero, not quite to zero, but definitely more of an accumulation type of trade, but not a breakout scenario, and not trying to guess at the vote or anything like that. I don't like playing those things because frankly, I don't know what's going on in those votes. So let's not play that game.
Right. Okay. I like that. Thank you for that, Mike. And last but not least, let's take a look at Nike. Do you see some bearish momentum creeping in here, Mike? What's going on?
Yeah, it's almost a lack of bullish that it can't get over these key levels, and there's a lot of things going on. They're closely tied with China. We know that relationship has been tenuous and has become even more tenuous as we're trying to figure out what lane they're going to get to as far as west versus east, and so it just can't go higher. And so I do like if you're looking for something that is to the downside, it can't get over that 50-day moving average. As of this morning, it couldn't get over Friday's highs. That's a decent play for the downside for me.
Understood. Okay. And Ben, what do you think?
Mike, you brought up a good point there. Again, everybody's kind of looking to see if the bears are stepping up at this point. But I think the responsibility lies on the bulls. And as Mike mentioned, with ongoing uncertainty in terms of China, a major component when you're talking about Nike and some of these other big names, that's one to factor in, and it is rolling over at some key technical levels. I think, again, we were talking earlier in terms of, we were talking about the key juncture in terms of ZI and how the broader market was at this key area of resistance right now and how would it perform at this level. Well, I think, again, this is an instance where if the bulls aren't able to continue some of the momentum we've seen off the March lows, then, considering the underlying trend has been to the downside, the fact that the bears have been in charge at this point, again, I think the burden really lies on the bulls, and we'll wait and see if they can get us back up above 140, but you do see a little bit of a double top having recently formed. Mike was talking about the 50-day moving average. I'll get into that in just a second, but you can also see a pretty well-defined lower extreme. That's the March low down around 116. So the lines are drawn here. Again, 140 down to 116 in terms of the next key level to get up above or below as far as that indication as directional conviction. Last, or just a point with the daily time frame, you can see how, as Mike mentioned, right up to that 50-day moving average. Now, what concerns me is RSI is kind of rolling over here. It's struggling to get through the middle here with follow through. And notice here how volume also kind of lackluster on the way up in terms of what we've seen, but just basically that lack of real bullish sentiment to see follow through at a key area when this market has been trending lower. You can see well below the 200-day moving average at this point still. But I do want to point out that we recently just filled a gap from back in September. You can see here is that gap that I was looking at down around this 120 level, but stalled out in terms of momentum to the downside. Lastly, a quick look at the weekly. Nicole shows the swoosh to the upside and how, again, it does seem like some of that real enthusiasm for this big name has been kind of coming out. NKE sort of rolling over off 179 back down to 134.
Yeah. I like that swoosh reference. I mean, these kinds of charts are really exciting, particularly as you talk about filling those gaps. Final thought here, Mike, on the trade for Nike.
Yeah, I don't think that Nike goes and sees the lows. What I would play this with a credit spread and selling it in that 50-day moving average area. So more of not up versus straight down sort of scenario. So like a 34-36 call spread, selling that for 75 cents up in that's for regular April. So you're not laying too bad of odds on something like that, and you can actually get some premium for it just sitting.
Right. Yeah, I'm so glad. Thank you so much, Mike and Ben. A great big three today for ZoomInfo, LFLY, and Nike. Thank you very much. Mike Shorr of Prosper Trading Academy and Ben Lichtenstein. Thanks so much.